Hey everybody, Brian Shannon here from alphatrends.net. Today is Wednesday, the 29th of October 2014. Let's look at this market. The S&P 500 lost 30 cents on the SPY today, and you can see we are still above a rising 5-day moving average, so the intermediate term remains innocent till proven guilty. And now we have what looks to be an important level of support at about 196.65. If we break below there and hold below there, then perhaps we see this market start to turn slightly lower to sideways as it tries to digest these big gains that it's seen over the last 2 weeks. There's no sign that the market is turning lower. In fact, today we did close back above the volume weighted average price after that volatility from the Fed. And this type of volatility, of course, is not unusual after a Fed event. And right now what we have to do is let this market settle in a little bit and see how it holds that 5-day moving average and 196.25 to 196.65. Again, breaking below that and holding below it might put a little bit more pressure on this market, but for now it remains very impressive that the market's able to continue to rally and hold on to the gains that it's seen. The Nasdaq has only closed higher than this today's level twice, and we can see here on this daily chart this V bottom that everyone has been talking about has exceeded the magnitude of this prior little sell-off right in here, and now the bigger potential level of support is at about 98.75. And looking at the 5-day moving average, that's approximately where we have it there as well. So I'm going to say 98.5 to 98.75 is our key level here in the NASDAQ 100. We are above the volume weighted average price for the day here, despite being down 37 cents. And the market continues to hold on to these gains. There's just no reason to be short right now. The Fed, sometimes it takes a couple days for the full effect to take hold in the market, but for now, again, it remains extended but innocent till proven guilty, as it is above a rising 5-day moving average. We did break this trend line, but again, trend lines are just an indication that the rate of ascent has slowed. It doesn't mean it will reverse. The Russell 2000 was down 27 cents today, and same thing here. We've got a pattern of higher highs and higher lows above a rising 5-day moving average. So for now, I think today's lows down to about 112.75 are going to be important. So 112.75 to 113 is our first near-term band of potential support that if we break, then I would expect a test of the 5-day moving average and a bigger area of support below at about 111.5 to 111.75. The semiconductors were actually up 3 pennies today. This market continues to be above its rising 5-day moving average. And again, there's just no reason to sell short as the market makes higher highs and higher lows above a rising 5-day moving average. I think the key level for the semiconductors is going to be down near about 49.5. As long as we remain above that, then the markets are going to be innocent till proven guilty, and there's just no reason to fight. As I mentioned, the financials 23.10 to 23.20 is the near-term more important level for the financials, and they continue to be very impressive as well. Today, Apple was up 60 cents, and as I've been saying, I haven't thought it was a buy except for short-term day trades, and the key in here is that if you're long to continue, if you've been long for a swing trade, let's say, raise your stop up to the level that's appropriate for you. Perhaps that's just below today's low, so maybe near about 106.25. That would break a lower low, but we're still above that rising 5-day moving average, so there's no evidence that this stock is topping out. It closed right near the high of the day and of all time as well. So again, there's just no evidence that these markets should be shorted. Gold was down, no surprise. That's in a primary downtrend. It rallied up to the declining 50-day moving average, sucked in another group of longs, and here we are going back down to test the lows once again. The tests of support become more frequent. That tells me that it's likely we'll see a bigger drop in here at some point. And the bonds are starting to neutralize a little bit here. We've been talking about them as in a primary uptrend on the daily time frame and the weekly time frame, but that they have been in need of some corrective action. That's what we're getting. We're starting to see that it's testing the declining 5-day moving average, and I think back above 120, then if you were short the bonds, that was where you would want to cover them. But right now, there's just no evidence that it's time to do that.